Tuesday, March 19th, Stan Ehrlich, market analysis. Mostly I'll be concentrating today on support and resistance, a feature that I like very much, learned to use over the years. And I'll always start, as I do, with the stock market indexes, Spider, DIA, Russell, Qs. Here's the Spider. And the SPY, currently up around 2.25 points and very close to the high of yesterday. This morning we opened a little lower and closed a small gap when we popped up yesterday on Monday morning. So that gap is closed between the high of Friday and the low of Monday. Now it's history. Gaps are almost always closed. They're like a black hole in space. They keep sucking the price action back into it. So done, just like you might expect. But I don't like, you know what I've been trying to do? I've been trying to forecast a downside move back to a support area, a relatively decent size now that the market has kept going up for a couple more 3 weeks. Now it's a relatively decent downside correction back really to about 477. And here we are at 515, close to the all-time highs made only a few days ago. The trend is obviously very steadily up, but we have another small portion of time, a week, week and a half, maybe two, where the market has been stumbling a little, but it did that before and then made new highs, and it did that before and made new highs, etc. So I'm not a real happy camper here. I'm looking for a bearish engulfing ER sell signal. I don't necessarily have to get one or have one show up in order to turn bearish. I really want to close below Friday's low. I thought Friday was the beginning. It stopped and went right back up yesterday, and so far, again, it's up 2 points. So, overbought conditions? No, not at the moment on the SPY. We did have overbought conditions only at the very beginning of the month, a couple of weeks ago. It did produce a little bit of a down move, but it was only for one big down day. All I can say is I think we have the makings for a sizable correction. At the most, I'm looking for 477 and a little under in the support area. And there are a couple of other levels on the way down at which they might start to turn up again. But I hope I can detect that if they get there in the first place, which I'm expecting it to be in the next week or two. Next chart is the Spider, but a 1 minute chart. And you can see that we just finished making the high for the day at the moment, which we could make new highs any minute. And that would be almost above yesterday's high, real close. But we do have some other resistances, not very much. There's a lot of support under and hardly any resistance overhead. And I have to say that for most of these indexes. The E-mini, of course, is the miniature of the big boy, the S&P SPY. So here we have prices very close to yesterday's high, very close to the highest high for the trend made only several days ago. But we were overbought back on March 4th and dribbling down ever so slowly with the RSI highs over time, while the price levels are fairly flat on the average. But again, we're pretty close to those highs. Now, next chart is the 1 minute E-mini, ES, and we just finished that little spike, which challenged extremely close to yesterday's high and is pulling back very slightly. But I don't think that means too much so far. Next chart, Qs. Now having a lot more trouble. We are not very close to the high of the rally. The QQQ had a bearish engulfing ER, almost ER sell signal at the top of the market. The reason why I don't have a signal up here is because it wasn't overbought within a few days, and that's the answer. Otherwise, everything was there, and the overbought condition was very close, but that doesn't count. So, almost. Now, I wanted to close below Friday's lows. Again, same date, same time. That should be a downside breakout for these stock indexes. going below, getting below, and staying below Friday's low. Next, QQQ, 1 minute. Excuse me, and a sneeze. 1 minute chart, close to its high for the day, but a lot more resistance above the market in the last week or so. That's unique to the NASDAQ at this particular point. We've got the NASDAQ daily chart. This is the NQ futures, June futures contract. Same thing as the QQQ. Very close to the low of last Friday, this morning. But at the moment, we've climbed back up in the upper third of yesterday's range. I got to see some significant weakness. I wanted to close below some previous lows for a short time frame, or the longer the better, in order to get more bearish more quickly and be exonerated, so to speak. But I am not yet. So next chart is the NASDAQ June futures contract minute by minute. And you can see we've been very strong since the dip this morning. That low is at 6:45 California time, only 15 minutes after the opening of the regular session. And the regular session, I remind you, is 6:30 California time to 1 o'clock California time, the old-fashioned stock market trading hours in California. All right, so next chart is the Russell daily data chart, the Russell 2000. We did this morning make new lows for approximately 3 weeks. But we're coming back really nicely at the moment, well into the range of the last previous 3 days. And if we keep rallying, we'll have a bullish engulfing. Now, we won't have a buy signal. It's not oversold, which is necessary with the engulfing. So I'm not going to get a buy signal, but I am getting stronger than I'd like, quicker than I'd like, and to a more solid degree, so to speak, than I would want. But the Russell's actually doing what I was expecting, slowly, and the other indexes are not quite doing this. But maybe the Russell's leading the way down. I don't expect anything big. I'm not bearish. I'm reactionary in a bull trend. I really want to be a buyer on the break, which I expect to happen very soon. Next is the Russell 2000 1-minute chart. And we've rallied back up to a minor resistance for the last few days. And it looks like it might be turning down some. So it's behaving okay. Bonds. I mentioned the support area in the last couple of days. I mentioned it was extremely close to oversold. I mentioned the support area could turn the market up. I'm not sure yet. Today looks a little interesting. We're up 16 ticks, half a point. Nice, not great. No reversal. Basically holding in the support area that was developed during the February 13th to approximately March 1st timeframe. It's not a big deal. We might break it. I don't think by very much. I don't think it'll last very long. And I am very bullish in interest rate futures long term. So the support area could be doing the trick. I just can't be particularly adamant about it at the moment. Notes did actually get just barely below my 25, therefore turning RSI yellow, therefore having the potential of a bullish engulfing candlestick to get an ER buy signal officially, which will change all the colors, and I'll be getting a buy signal. But that's not happening in the notes today. What is happening is that yesterday's low, right smack dab at the bottom of the support area, just like what happened February 23rd, is holding. We've got a little higher at one point during the day than yesterday's high. We are maintaining a half a point higher, just like bonds, and that's not bad. But I'm not getting anything out of it than a little rally at the moment. No reversal, no conviction that it's going to end up holding, but it could. I mean, that's the idealistic spot for it to stop moving down at support. So let's see if we get a good bounce out of this. I wouldn't be surprised. I can't be very adamant about it. And the 1-minute chart on the 10-year notes. back into this little support and resistance for the 10 years. Now, crude, we're smack at the top of the resistance area. We are also overbought for the second day, now almost at 80 on the RSI. If we start slipping at this particular point, and we're not, we're up 0.77, but at the top of the resistance and overbought, this is a classic spot for it to potentially turn down. I'm watching for a bearish engulfing, going to get a bearish ER sell signal out of it and be getting short sale signals and trades if I get lower than yesterday's low, or if I get a bearish engulfing within the next few days. I'm watching for sell signals. It looks like it's prime territory. Heating oil. Close to overbought, not there. That implies that it's got a little elbow room to move up some more, which I think is absolutely correct. We don't have a resistance area. It's just a little bit above where we are. So what's wrong with a little bit more rally, which it did before several times? And if you look at the long-term history here, boy, oh boy, is this a really significant resistance area. June of 22, topped out. November of the same year, 22. Several times it topped out in or a little bit above, starting in August, and then in September, and then in October, and then in late mid-October, in this same resistance area that we are very close to. And then it did it just February of this year. Is it likely to do it again? Why not? If it breaks out to the upside, that would be super bullish. I'm expecting it to come down to this support area, which is 2.48 to 2.35, and then we'll see what happens next. Should take a couple of weeks. Next, natural gas. At previous lows, we had almost a bullish engulfing. The low on this date was, come on, give me a price. Oh, there we go. 1.643, and the low the next day was 1.646. Very, very close, but not an engulfing, but super close to oversold, and super close to previous lows, which were oversold, and that was only a few weeks ago. Let's call it a month ago. So, double bottom? Yeah, maybe. A lot of conviction that's going to happen. It's beginning to look a little bit more interesting. Closing above Friday's high, that would be a lot more interesting. And in order for it to be a legitimate double bottom, we've got to start closing above the resistance, which is slightly above us, and the high at the top of resistance at 2.004. That is going to be an upside breakout, and a move up to the next resistance area would be likely after that. So I'm keeping a close eye on this because of this oversold situations or close to it, and the double bottom, and the position we are in at the moment relative to resistance. So watching for more strength. Unleaded. This is an ICE, New York Futures Exchange contract, and we're having with NinjaTrader some data problems, so no comment. This is a week old. Next, gold. But I do have TradeStation charts I'm going to show you at the end of this for the other 5 or so commodities that I've been forced to skip because of the data problems they've been having with NinjaTrader and the ICE exchange. This is good stuff. Gold, slipping slowly. I was talking about a blow off top. Super, super, super important resistance in this very, very high RSI levels. That is 80, let's call it 90. Let's push it up just a little bit. There's 90.5. Above 90, which is rare to begin with, we got all the way up to, I think it's 93 or something, 93, 94. Unheard of. You'll see this happen once a year or less often than that on daily data charts with my custom RSI. Remember mine, I learned RSI from Wells Wilder himself. I don't use a 14-day calculation. I use a shorter one. I look back a certain number of days to register overbought or oversold. He did not. He only plotted the closing at the close of the day. I plot the highest high, the lowest low, and the close, all three in a vertical bar instead of a point-to-point line chart. So there's a variety of differences, but it has a lot of similarities also. I've got color changes and a couple other things. Now back to the chart. What's gold going to do? I guess it's going to dribble off back down to the support area here. 2104 seems very probable. Just doing it awful slowly. Every high for the last, 6 days or so, has been lower than the previous day's high. The lows, yeah, not quite so consistent, but yesterday, today, not quite. It's coming along. Slightly bearish, looking for support to get tested. Again, back down to 21.02, and maybe 2070 silver. Stopped in overbought condition. Did have a bearish engulfing a few days ago that did not work. Small day trade losses and overnight losses. Not terrible, not good, but not terrible, livable. And waiting for a brand new sell signal, which I haven't gotten yet, and I could still within the next few days, but slipping, nevertheless, a little today, not much. I'm trying to justify a move down to support again, but I just don't have quite enough evidence that it's topped out on Friday. No comment. Next, platinum. Kind of the same situation, but it's already come into support already and dropped off pretty good in the last 2 days. Pretty good. In 2.5 days, so to speak, we've gone from the high to prices lower than a whole week or so earlier. So that's a pretty good break in 2 days, but not oversold yet. The only thing I can say is support has been extremely solid. And why wouldn't it bounce out of support another time? Maybe toward the middle to bottom of the support, like we saw March 1st or around February 9th, because those prices, those dates tested the bottom of support. So I think it could happen again. High grade copper. Overbought for the last few days, very typical. Finally, today, we're seeing a pretty sizable break, down 0.055 and near its lows. Support just below the market might hold. Remember, we spent a day or two in new high ground since May of last year, a long time ago. And if support holds at 4.0255, give or take, and then a little bit lower, of course, in here, we could see new highs after that. Got to wait to see how it acts at support. So I'm a slight bit bearish for a little bit more time, few days, and then I'm going to talk about support holding or not holding and see what it does. Soybeans. Okay, the oversold condition right here. RSI got below 25. Did turn the market up, no question about it. It did rally up above the resistance level, but we have now stopped in overbought conditions, which I pointed out just a few days ago. So what do we got here? No particular signal. A spike high I talked about on March 14th, or maybe I saw it completed the next day. That would have been Friday. It's not good that a market runs up a lot and then comes all the way back down to where it started, especially when it got into overbought condition at that time. That's not healthy. And it's panning out to be a little bearish. So now today, 3 days later, we have a lower low. We have current quotes that are below most of the price range since the spike high on last Thursday. And I fully expect it to dribble off to 1173 and 1158 area, the support area that it tried to hold in before, drop below, and then punch through again. So something's happening in this price range, which is holding the market. And we'll have to take a closer look when it gets down there. But I do think it's going to go down there and right away. Next, oil, soybean oil. bounced out of support in oversold conditions. Great combination. I love it. Bounced almost all the way to the little resistance area here just yesterday. And then in overbought conditions for the last few days, starting to move down some. Not a lot, but I do think that's it. Yesterday's high is probably the highest high for maybe a few or a couple of weeks to come. Back down here to 44, 45 area. Next, soybean meal. Well, it's already starting to do it. While I'm predicting in oil, it's already starting to do it a little bit better in soybean meal. Excuse me. We had resistance, stopped the rally. It punched through slightly, but it couldn't stay there. Closed pretty poorly, relatively speaking, on Thursday of last week. Dribbled down a little bit lower on Friday. Yesterday, slight new lows again, and today again. So today's low is a new low for about 6 days or so, 6, 7, and getting closer and closer to my support area and getting closer to oversold, but not at this moment. So there's enough leeway here, elbow room, to get into the support, bounce out of it again. But you know, I keep saying, I don't trust any big bullish move yet in any of the greens. They mostly have the appearance of doing what corn and wheat have been doing for a while, and that has been for the soybean complex making new lows for substantial amounts of time and basically continuing the long-term downtrend. So corn, daily data, doing exactly what I just mentioned. Well, I should say it actually bottomed out at the previous low. Now this is 1,000 days loaded in history. So we tested the low that was made September of 21. And it also, in my opinion, looks like it's going to get broken. It has been making since September new lows for a couple of years. And it made new lows. And then it made new lows and came up to resistance and stopped, made new lows slightly, rallied a little, new lows, kaboom, 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 down, 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 down. Now, finally, we did get a while back extreme oversold. There's no way I would have missed that. And I know we got a buy signal exactly at the bottom of the market in very oversold condition on February 26th. Now, today I said at the beginning of this recording that I was going to concentrate more on support and resistance and less on my ER signals, which I'm doing. But I needed to point out that fantastic one. That date of February 26th is a bullish engulfing and super oversold as well, down to like 11. Beautiful buy signal, classic. I think we got stopped out in the last couple of days of that signal, but it depends upon how fast you wanted to move your trailing stop. If you're slow and you're looking for long-term trades, you want to use a slow moving stop. Fine. My system can do that for you. My system is built mainly for the entry skill, picking market tops and bottoms, picking turning points at on the day they turn or very close to it. So in corn, although short term, I'm modestly friendly because it did bounce off of support on Friday. It is coming up a little bit. Wow, 3 cents, not much, but up is up. And maybe it'll punch up a little bit more, but I don't trust it. The trend here is absolutely long-term bearish. The only thing I've got is that test of lows 1,000 days ago. It could turn into something bullish, but not yet. Wheat, well, I'm sorry, corn, 5-minute chart. Last day, that's when we got it. That's the buy day, right smack there on the date of February 26th. Big new low for the trend, big bullish reversal, got long approximately near the high of the day, very true, but look at that. We never did come down much after our entry price, just a tiny bit. And after a little while, up and up and up and up. So I'm liking what I'm seeing. Friendly, modestly, cautiously friendly on corn. Wheat. Now I've got my strategy loaded here. It's very complex on wheat. And when I'm not going to go into explaining all of this, but we got 2 green buy signals on the first low of the move, and then that did not hold. The second one was March 11th, big bullish engulfing, oversold conditions, and we were long. A couple of days of sideways, a little tiny bit higher. The market dipped down somewhat, allowing us to add another long ER3. Now we have 2 positions. These 2 green lines represent the beginning point of this one and the entry price of this one and the current tick. So both are green, both are profitable. And I was very worried yesterday. It was coming very, very close to our stops. But the fact that it's run up today higher than yesterday, the day before that is good news. I think this is about to make a new high since the buy signals occurred, since the automated trading system ER signals got in. We'll see what happens next. I like what I see. I am friendly on wheat, but again, what the heck is the long-term trade here? Trend? It is obviously down big time since the war began, frankly. And by the way, we did get a sell signal on the exact top day, the day of a screaming bull market, limit up bid, lock limit up on the opening all day long sometimes, screaming bull market. I lived through the Russian grain deal in 1972-73 timeframe. I saw this happen only once before, and it was back in the early 70s. That's the only time I can remember. Maybe the Hunt Brothers top in silver and gold, but this kind of activity is extremely rare, and it's as a result of extreme situations. So at the top of it, we got a sell signal. I'm so proud of that one. That was incredible. Now, what next? Bear trend. Trend is your friend, but I got a buy signal, a pretty double good one. So short term, I'm looking for more of a rally. Next, the 1 minute on December wheat. Here's our current trades. There's entry points. It gets a little complicated, but I know exactly what it was supposed to do, when it was supposed to do it, and why it was supposed to do it, and it did it. That's what I like. Okay, next. Cattle, not much to say here. I mean, we're drifting higher slowly. For a few weeks, we've been between the support level and trying to get up to the resistance. So not much to say. I guess I'm neutral to maybe a hair friendly, and that's about it until I get a new signal. Now, it looks like this is a bearish engulfing, which it really is, but it's not overbought, so I don't have an official ER sell signal. Bearish engulfings are supposed to predict a move down. This one hasn't done that yet. We're still going a little bit sideways after this complete range. So maybe it still will start to slip a little, but it's not my official sell signal. It's part of it. Next, and it's not working yet. Hogs. Resistance is stopping the rally. Support is holding the brakes. You got yourself a trading range. There is a possibility, by the way, of a bearish pattern forming that I need to mention at this point. 1 second. Let's draw a line from this point to the highest high. Now that's a measuring stick. If I draw the same line from the highest side to the right, oh my goodness gracious, great balls of fire. We have exactly the same number of days like another market I will show you. Cotton, up to date. I'll have to use TradeStation for that in a minute. But this is a possible head and shoulder. I will draw the neckline in for you right now. And there you have it. So the timing is perfect. The shoulders are exactly the same number of days from the highest high to the left and right. The neckline slants upwards, which is normal, but not too sharply higher. I like what I see. Watch out. If this support area doesn't hold and we start to break below this line right here, then we have a head and shoulder top and we will go down. How much? I'll measure that for you real quick. From the highest high on the same vertical point to the lowest, to the neckline, is what we call the depth of the formation. And you take that stick and depth measurement and drop it below the neckline on the day you think it's going to break out, which could be today, I can draw this across the line for probably tomorrow or even the next day. And it won't change the downside objective very much. It'll raise it just a little bit, the exact same angle of the line. Anyway, it's going to be in the ballpark of 76.5, back down to where it bottomed out before. I'm going to leave these marks on the screen for the future. If we go too high, it'll kill the formation, and I will erase the marks. But this is good at the moment. This is a head and shoulder top, just starting to come down from the last shoulder high made on Friday. Not too much evidence of that yesterday, but today, a little bit more. Pay attention at this point. Don't go short until it starts to close below the neckline if you're following the pattern and what you're supposed to do with the pattern. I hope I get a bearish engulfing in here, but I won't get a signal because I didn't get overbought. That's too bad. Next, we've got OJ. Now I'm going to switch to TradeStation because NinjaTrader is not updating the ICE exchange. Here we go. OJ. I got a bearish engulfing on this daily data chart. Now, this is a continuation contract. It's not exactly a contract month. It's a combination of a couple of contract months blended over time. The formations and the signals are 99% exactly the same. So I'm not worried about idiosyncrasies or minor differentials. Obviously, a flat bottom right triangle being made in here. Top's coming down. We got a signal at the top of the beginning of the flat bottom right triangle. Great. It's just slow to make money. I think it's going to break out to the downside and come down even more. Next, we are in the process of developing what I think is a blow off top. I probably said that back here when it only went down for 2 days. I probably said it over here as well, right in those two time frames. And it only went sideways and then down a little. Usually, these blow-off tops, especially when they get up in the 90s, which again, per symbol, is very rare. You see it happen maybe once a year or less. And now it's happened twice in the last couple of months. This could be the beginning of something very, very bearish, long-term. I just can't I can't get a signal yet. But the way it's acting is exactly the way blow-off tops act. Will it turn into one or not? That's the question. Next chart is coffee. Resistance has stopped it. We're starting to come down to the support levels, but it's really a big sideways nothing. Not too much to say here. And sugar. Dropping off a little. Again, big sideways. But the overall trend has a bearish tinge to it. The major resistance area stopped the last rally a couple of months ago. We're coming down toward the last lows. They were oversold, but only at the beginning of March. So I expect 20.5 to be tested. And you cannot rule out a test of 1940 also. Looking for lower levels. Lastly, cotton. I talked about this back on March 8th. The number of days from the first shoulder high is exactly the same from the shoulder to the head as the number of days from the head to the last shoulder. I pointed that out. We made the count. I believe it was 7. Perfect. Came down, and this is about where we are right here with that other chart, which is building a head and shoulder top. I forgot what the symbol was. Came down to the next neckline. This is when the trouble with the ICE data for Ninja started. So I have these charts up to date with TradeStation, but not Ninja. Ninja will fix it, I'm sure, real quickly. I hope. Broke the neckline. Off we are running. I measured the minimum downside objective in Ninja. It was approximately probably 83 or maybe even a little lower. I'm just eyeballing this. From that high to this point, you measure the same amount down as from this breakout level. Oh, sorry, that breakout level down straight to the obvious downside objective. and you get what you get. And I think that's going to be around 83. We're on our way. We've made new lows for a couple of 3 weeks. We broke the neckline. We went up and tested the neckline. That's a little unusual getting above it, but it closed below. And today, kaboom, new lows for a month, almost 3 weeks, and not even quite yet to support, no, not even close to oversold. We're on our way down. I think this market's about to go down to, like I just said, 83 or so, and maybe even more. The upside or downside objectives off of chart patterns are, generally speaking, minimum objectives up or down. The markets oftentimes go significantly farther than what the pattern is supposed to predict, which is a minimum. That's it, ladies and gentlemen. Thank you very much. You have a great day. Profitable trading to you.